Ever heard the saying, money makes money? Well, banks kind of spin that idea. They tell us our money is growing in our accounts. But in actual, it never happens like that. Sure, the number might go up, but its actual worth doesn't keep pace, especially with inflation shooting up and the interest rates offered by banks barely keeping up. It's like your money's stuck in a treadmill, running but not getting anywhere. But don't worry, we've got some great news for you. In this video, we're going to uncover 7 assets that Robert Kiyosaki considers better and safer than cash. For those who are not familiar with Kiyosaki, well, he is author of a best-selling book, Rich Dad, Poor Dad, and seasoned investor, has a distinct philosophy on debt and investment. So get ready to learn how to make your money work smarter, not harder. 1. Precious metals. Gold, silver, and platinum. These are what some call God's money. You see, one major reason we value money is because it helps us store wealth for the future. But here's the kicker. Governments these days keep printing more and more money to cover their debts. So, that piece of paper you hold might lose its value sooner than you think. That's where the financial experts come in. They advise putting your money into something solid, something that's rare, and can't just be conjured out of thin air. That's why the wealthy always set aside a chunk of their investments for precious metals. Gold, silver, and platinum are like anchors in turbulent financial seas. When inflation starts skyrocketing, these metals tend to shine even brighter, holding their value steady. Back in the day, around the 1950s, you could snag an ounce of gold for a mere $400. Fast forward to 2023, and that same ounce is now valued at over $2,000. But wait, there's more. According to the folks over at Prime XBT, they're predicting that by 2032, that ounce could skyrocket to a whopping $10,000. That means in just about 10 years, your gold investments could potentially be worth 5 times what they are now. While cash seems to be losing its value over time, gold just keeps climbing higher and higher. 2. Industrial commodities. Let's talk about the real MVPs of the material world. Industrial commodities. These are the raw materials that keep our world spinning. Sure, precious metals like gold and silver get all the glamour, but these industrial gems offer more than just rarity. They're practical powerhouses. Take silver, for instance. It's not just for jewelry. It's the secret sauce in making electronics, medical gear, and even nuclear doodads. And it's not alone. Metals like cobalt, nickel, and copper are the unsung heroes of industry, thanks to their unique properties that make them must-haves in various applications. Let's zoom in on cobalt. Since around 2020, demand for this stuff has gone bananas. Why? Because it's a key ingredient in making batteries for electric cars, and those babies are taking the automotive world by storm. So while gold and silver might hog the spotlight, it's these industrial workhorses that keep our world ticking. Likewise, its prices have surged from $20,000 per ton in 2012 to a whopping $40,000 in 2022. That's a staggering 100% jump in just a decade. So having a slice of these raw material pies in your investment portfolio can really beef up your returns, especially during high-demand periods. But let's face it, not everyone has wads of cash lying around to buy up raw materials and storing them or finding buyers. Yeah, that's a whole other headache. That's where investing in mining stocks like Rio Tinto, mining-focused mutual funds, or even dabbling in derivatives like futures and options come into play. These are all savvy ways to get in on the action without needing a truckload of cash or a warehouse to store the goods. 3. Safe haven currencies. Let's talk about safe haven currencies. These are the go-to currencies when the rest of the world seems a bit shaky. In today's world of paper money where nothing's backed by gold anymore, geopolitical stability becomes a big deal when you're deciding where to park your cash. That's why the wealthy tend to stash their money in Swiss banks. Switzerland isn't just known for its chocolate and watches. It's also got one of the sturdiest economic systems out there. That's why the Swiss franc is like the superhero of currencies when things get rocky. Whenever there's turmoil or instability elsewhere, money tends to flock to Switzerland faster than you can say bank vault. We've seen this movie before. During the Eurozone debt crisis in 2009 and the global financial meltdown in 2008, Big bucks made a beeline for Switzerland to escape the currency chaos and keep their wealth safe and sound. Moreover, the Swiss franc is like a superstar in the world of money, especially when things get messy like during the recent Russia-Ukraine tension. When the US put the squeeze on Russian energy deals, Russia switched gears and started using Swiss francs for trade. Suddenly, everyone wanted Swiss francs, pushing its value through the roof. In early 2023, one Swiss franc was worth a hefty $1.1074, making folks who had them feel like financial wizards overnight. So, currencies like the Swiss franc, British pound, and Chinese yuan are like the superheroes of the money world. Solid, reliable, and worth their weight in gold. But not all of us can waltz into a Swiss bank and open an account. That's where currency ETFs and forex brokers like Forex.com come to the rescue. They let even small-time investors jump into the currency game with as little as $100, giving everyone a shot at riding the money train. 4. Sovereign guarantee. Let's take a closer look at the dollar bill. Ever noticed the fine print saying, "This note is legal tender for all debts public and private"? It's more than just fancy wording. Since 1971, when President Nixon did away with the gold standard, the dollar became the go-to currency backed by US law. This gave it value as a trusted medium for trading goods and services. Even though fiat currencies like the dollar aren't backed by gold or anything physical anymore, they still rely on something important: the trust and creditworthiness of the government. In simple terms, your money's stability hinges on how solid your government is. That's why investing in things with a sovereign guarantee like government-backed securities is seen as a smart move. It's like putting your cash in a rock-solid vault. Governments rarely default because if they do, it spells trouble for the entire nation. That's why investing in government securities, like treasury bills, notes, and bonds in the US, is considered super safe. These investments offer better returns than keeping money in the bank and are backed by the strength of the US government. Even small investors can get in on the action through platforms like Treasury Direct or the secondary market. It's like having a piece of the government's financial security in your pocket. 5. Small and incremental change. Smart investments for growth. While treasury investments are safer than cash, they don't offer the high returns that stocks do. For investors looking to grow their wealth, stocks are the go-to option. But not all stocks are created equal when it comes to risk. There are two main types: value stocks and growth stocks. Value stocks are like the steady, reliable players in the market. They're usually undervalued by investors, but have solid potential for growth over time. On the other hand, growth stocks, like those in the tech sector, are riskier bets. They're all about innovation and potential, but they also come with a higher chance of failure. Value stocks like Nucor, specializing in industrial metals, are considered less risky because they cater to established demand that's likely to continue into the future. These stocks not only offer steady and stable price growth, but also tend to pay out reliable dividends. However, digging into the fundamentals of each value stock can be a real headache for regular investors. 6. Land and real estate. Land and real estate are valuable assets for a simple reason: they endure. Land, in particular, retains its worth over time because it's always in demand. Since ancient times, land has been crucial for various purposes like housing, agriculture, and commerce. With the global population continually increasing, this demand remains steady. Additionally, properties like residential homes, offices, and commercial spaces built on land also maintain their value due to constant demand. Therefore, investing in land and real estate acts as a reliable hedge against inflation in your portfolio. To put things into perspective, let's crunch some numbers. According to a Bloomberg study, housing prices have tripled between 1992 and 2020, despite taking a significant hit during the 2008 housing bubble. This shows that real estate can be a valuable asset, especially when the dollar's value is slipping. However, many small investors tend to overlook real estate until later in life, often viewing it solely in terms of the home they live in. While owning your home outright is a worthy financial milestone, it's smart to consider investing in the retail property market at any age. 7. Bitcoins. If you've been keeping an eye on Bitcoin's price lately, you'll know that investing in cryptocurrencies can be quite the roller coaster ride. After hitting a high of over $68,000 in November, Bitcoin has since dipped back down to around $50,000. But for long-term holders like Kiyosaki, this fluctuation isn't causing much concern. Despite the ups and downs, Bitcoin's price is still up more than 100% over the past year. Kiyosaki himself remains unfazed, mentioning that his entry point into Bitcoin was at $6,000. In fact, he's been quite bullish on Bitcoin's future, tweeting back in October about its promising prospects. For those looking to jump into the crypto game, there are a few options. You can buy Bitcoin directly, though be aware that many exchanges charge hefty commission fees, some as high as 4%. However, there are also investing apps that offer commission-free trading. Alternatively, you can explore companies that are heavily involved in the crypto space. Take MicroStrategy, for example, which has amassed a significant holding of 122,478 bitcoins. Then there's Tesla, the electric vehicle giant, which holds around 43,200 bitcoins. And let's not forget about companies like Coinbase Global, which operates the largest cryptocurrency exchange in the US. These picks and shovels plays provide another way to capitalize on the crypto boom without directly buying cryptocurrencies themselves. So that's wrap for today. We hope you've got some meaningful lesson from today's video. We will see you in the next one.